Well, as you know by now, there is no official jobs report today because of the government shutdown. But we found another way to try and get a look at employment in the month of September. We're going to call this our own Squawk survey. Evan Sohn is the CEO of Aura Intelligence. That's a platform for workforce analytics. Bill Dunkelberg is the chief economist at the National Federation of Independent Businesses. Both have real data on the state of jobs in this country. And, of course, we have our very own senior economics reporter, Steve Leisman, who has been digging into this problem for quite some time. So let's kick things off. And Steve, maybe why don't you give us an overview of how you've been looking around for these numbers for a while?
Nothing replaces the jobs report over time, but there are things out there that are pretty decent in terms of giving us a decent look at where things are going and the general state of the job market. That said, I believe Mr. Sohn has some different points of view, and Bill does. Can I start with Bill here? I think that's maybe the best way to go. Bill, we quoted one of our favorite economists here the other day, Ian Shepherdson, who said that nothing does better in terms of telling us where the job market is going 3 to 4 months ahead of time than NFIB hiring intentions. And we have a chart on that. Can you tell us what you're seeing when you look at what's happening with NFIB hiring intentions, small business, and why should this give us a bead on what's happening nationally?
Sure. Well, the answer is nothing really exciting. That's the problem. We ask each month a whole bunch of firms about the change in their total employment, and that gives us some idea of what the overall impact of hiring and firing is, and then ask about actual plans. And right now we see that there are a lot of firms that have job openings. There are, unfortunately, very few that get filled. So plans to fill them are always very optimistic, but when the dust clears, very few jobs actually get created. So that leaves us with a negative number for the net increase in employment for the small businesses that we survey.
But we don't see it falling off a cliff. Evan, just to spare the viewers, I didn't lead with calamity, Evan. So I just want to get your point of view here. You see the job market grinding to a halt, according to your latest work. Give us your the background and the detail on that conclusion.
First of all, Steve, good to see you, and happy anniversary to the Squawk Box.
Thanks.
Thank you.
We've been tracking, and we track job posting data and by industry on a week-by-week basis. And we started to see really a real decline across all sectors with a couple of spots of surging. So healthcare, which has always been just a bellwether for of this economy, where 1 out of every 8 people in the U.S. is employed in healthcare, is actually down pretty significantly this year. Restaurants, which is really a really good leading indicator of consumer spend, is down pretty drastically in September. So that's really that really makes it pretty looming. Software, internet, computer software, all down. AI roles still maintaining about 12.5% of those roles. So we really saw a pretty gloomy September. 2 exceptions. We saw September ending well on a week-by-week basis. Retail was up just a slight bit, like 2%, and then higher education was up.
Bill, I want to just work with me for a second. I have this idea in my head of a conversation that may happen at a small business. Jim says to Martha, Martha, did you call Indonesia to see if they have a cheaper price than the thing we were getting from Vietnam? And Martha says to Jim, did you call the Commerce Department to see if the tariff is lower there? And Jim says, no, I was on the phone with the accountant about what's happening with the depreciation schedule. And Martha says, the guy from Indonesia wants a rider on the depreciation of the dollar. And then Martha says to Jim, Jim, you're going to hire that guy? And Jim says, well, let's wait a minute till all this other stuff clears out. Are you hearing, Bill, from your constituents and your survey respondents? It's not negative. It's just uncertainty puts them on hold. Is there a hold going on because of some of the uncertainty and the changing stuff, some of which is good and some of which is bad? That's for Bill.
Sorry about that. Well, I think the uncertainty is about the economy. We have an uncertainty index that is at one of the highest levels that it's attained in the last 50 years. So there's a huge amount of uncertainty, and hiring is an investment, and we're not sure that we want to make those commitments. But the overall picture still is that virtually 90% of the firms that hire or tried to hire say there are few or no qualified applicants for the positions that they have. And, you know, we're not real high tech most of the time. So one wonders what's going on the supply side.
Hey, Evan, we have tried to figure out the two sides of this economy. When it comes to technology, there's massive spending that's taking place, massive CapEx spending. When it comes to the consumer side, we may have more questions about it. But you think that what's been taking place on the tech side is actually masking the weakness that we're seeing in other areas, to the point that, and that's maybe why we haven't had bigger alarms going off about what's happening in the jobs market to this point?
That's right. You know, when you're seeing hiring going on in computer software, you might think that that's really good. But if a lot of those roles are AI roles, they're really coming to replace other people. And that's really what we're seeing. We have a partnership with a company called Revelio Labs, and in response to the BLS numbers of a couple of months ago and the revisions, they started creating their own public labor statistics report. And they showed the same thing that we showed that we're saying for this past month, that the increase, there was an increase, a slight increase, both on the retail side and on the higher education and health side. But we're all seeing a real decline across multiple sectors.
Evan, I want to just get to how all this should or should not be affecting the Federal Reserve. If you look at one thing I keep an eye on is the October Fed funds futures a year from now. Where do they think the Fed funds are going to be? And it's down quite a bit and down sharply as a result, you can see from the ADP report, which came in negative 32,000. But if you look at the Fed funds outlook, you can see for the next couple months, they've got 25 built in, 25 built in. Do you think that the absence of the jobs report will mean the Fed could fall behind the curve or further behind the curve than it otherwise might be in terms of cutting interest rates to help the job market?
Yeah, absolutely, Steve. You know, we're looking at September. Last September, the U.S. created 225,000 jobs, but that was pre the revision of the whole year of another 800,000 jobs. I think when the Fed is listening to the BLS numbers, they're getting in late. You know, I think had the numbers been accurate back in June, we would have seen a rate cut in June or July that would have impacted Q4. And we think, just anecdotally, that given it's already Q4, fewer people are looking to quit. And when fewer people are quitting, and you look at the JOLT numbers, fewer people are quitting now. It's hard to find those candidates. As the NFIB just reported, it's harder to find those candidates because fewer people are quitting. I think had the Fed adjusted those rates in June or July, we would have seen a better response for Q4 hiring. I think now companies are waiting really for 26.